What's up, guys? It's February 4th, 2025. Had another sideways day. The market rallied and then sideways for about the rest of the day. I had a challenging day today. If you guys are in the stream, you saw it. I managed to finish today up 20 on this last breakout trade right here. I held it past 1 hour and got out of the tail right here. I was actually trading the micro MNQ, so it went a little bit further up. Excuse me. Anyways, I'm tired. Okay. Yesterday we had a rally testing the range highs and it sold off. This bar made multiple R's. Sell off here, so now we have momentum for this breakout. Bears that sold this bar have momentum. Excuse me. Bears that sold this bar made 1 hour very quickly and they take profits. The 1 hour was at the bottom of the range. Testing this breakout point here. Give me 2 seconds. Testing the breakout point of this breakout bar here. So let's put this in the middle. And let's drag it across. Bang. Testing the 50% of this. So you see how like the pieces are adding up, right? The market's testing a breakout bar, 50%. Bears are making 1 hour here. It rallies. The market rallies. Bears take profits around here, right? Previous range lows. Market rallies and we come back up. Traders who went short again, market order traders, let's say you short the low here, just miss 1 hour. And if you get filled down there or whatever I'm trying to say, the low of the day with a stop limit, you don't make 1 hour. So they start taking profits. They're around the low of this trading range. We have a lot of trading range price action today. Okay, about 50% of yesterday's range, and then it rallied, so it sold off. I think overnight it sold off and then rallied. Here's the 15-minute chart. Yesterday's price action, and I wonder if I can do something a little bit like that. It looks actually a little bit better. I kind of like that a little more. So yesterday we had a gap down, sell off. We rallied. Overnight session sold off to about the halfway point of yesterday. Last night's overnight session sold off to about the halfway point of the breakout bar, and we were in a trading range. We almost rallied to the previous swing high. Oh, we barely did. Oh, we did. Hold on. Let me just do the numbers. I'm looking at these numbers up here. Where are the numbers? Oh, the numbers are up here. So I'm looking at these numbers right here. So this bar's high is 69 even. This is 68.75. So we're 1 point and a tick, 1.25. I'm so bad at saying numbers. 1.25 points, 1.25. Oh my gosh. I need to go back to third grade math, everybody. You know what I'm trying to say. We're a tick and a quarter below yesterday's swing high. Oh my God. I'm gonna have to tell my editors to delete that. So we rally. We're rallying, pullback, climactic rally gets a small second leg, and then this bar for sure puts us in a trading range. Testing this breakout bar here, a lot of tests, and then it rallies like 1, deep pullback like 2, pullback like 3, and sideways price action. And then bears get a visible 3 legs, like 1, pullback like 2, pullback like 3. Testing the EMA. That's the daily EMA right here. So we're in a trading range. Could just put that right there. Put this one. I wonder if there's a way to not sync. There might be a way actually. I don't know. Whatever. No. Okay. Anyways, so that's kind of the range we're trading in. Yesterday's low, today's high. Rally, and we're in the upper half of this range. It's usually sell high, buy low. But we'll see. We have bull pressure. There's a trend line intact right here. Don't really trade trend lines. I just trade price action, but on the higher time frames, we can just be aware that there is a trend line kind of expanding. You remember one of the first things about we learned in the Al Brooks thing is to draw 3 points, and that it's better to have overshoots than undershoots. So it makes more sense instead of to have it like this, to have it like this and say that this market is overshooting or versus the channel lows, and now we're trading. Huh, interesting. So in terms of the bull channel, these two red lines, we're on the lower half of it. But in terms of, I don't really trade channels, but I do like to know what's going on. The market's always channeling. We're in the upper half of the range if we're going parallel. Anyways, I don't want to confuse anyone. Let's get to it. I think my patience was really tested today because I was frustrated for missing this entire rally. So I was fighting red P&L all day, and then the broker crapped out on me and I couldn't hit out of a bad trade right here. Made it a lot back here. Got snapped out. I got crazy. This freaked me out. I hit out. I rebought. I hit out. And I bought again here. Got out, and then I got the breakout. I think I went short one time really quick and I hit out. So I had to stop because I started to break the system, and I have a good profitable system. If you guys were watching the live stream, I said like, hey, I got to call it a little bit earlier today. It was getting after I kind of really started to lose my patience after this thing here. The broker wouldn't let me get out of my position, and it was just going against me. I took a big loss here. I got whipped out on the MNQ. This tagged me out and then rallied. Nonetheless, I finished the day up $20. Hard day. Let's get into the price action. I really like live streaming with you guys. I'll be live streaming tomorrow too. Bar 1, trading range bar. So yesterday we have a two-legged rally. Summarizing it, leg 1, pullback, leg 2, pullback. Today was the third leg. Then we go sideways. So market cycle, right? Market cycle shows us breakout, 14 is an opposite bar, so we start to channel. Then we get that second leg here. Deep pullback, testing the lows right here. And then we rally for that third leg. And then each of these legs have their own legs in it. So for instance, like this is the third leg from yesterday, but today it could be seen as leg 1, pullback, leg 2, you could say pullback leg 3, or even this has 3 legs within it. Leg 1, pullback, leg 2, 15 is a new high, pullback, leg 3. Lots of ways to count. What you need to know is the probabilities for continuation go down after a leg 3. I was long here and I got out on the close of this bar because it was a third leg. So leg 1, pullback, leg 2, pullback, leg 3, wedge top. Let's get down into the break. Let's do the breakdown. Bar 1. The heck? I just blanked out. Bar 1, bull bar, closing on. Bar 1 is a trading range bar with a bull body closing on its high. Bar 2 is follow through. Market breaks out of the bar 1 high with a bad close, just a couple points higher. Bar 3, pullback. It's bear body with bull pressure. Bar 4, pretty much a perfect doji, tails in a line in the middle. Bar 5, breaking out of the EMA. Bar 6 is the first pullback for bar 5 with a bull doji with a bull close, so that's great for the bulls. Let me get this thing going. Bar 6 right here. Strong breakout, creating a gap. We have 2 gaps from the open, so that's a lot of bullish pressure. Something to think about if you're looking to get short. A lot of bullish pressure. Bar 8, good follow through. So now we have 4 bull bars in a row. Bar 9 is that first pullback. Bar 10, you could buy the first pullback, get out for 1R. That's a good scalp. Then we go sideways for some bars. About 9 bars. So sideways here. Leg pullback, leg 1 for the bears, rally, pullback, leg 2 for the bears. Creates somewhat of this creates somewhat of a wedge bottom. 1, 2, 3. There's a fractal wedge bottom right here, and it rallies. Bar 19 is a strong breakout bar, but it's not breaking out past many bars. Bar 20, the bulls are keep buying high, so momentum's picking up. 21, 22, 20, 21, 22, 23. Sideways price action. Bulls have the momentum. Bulls are getting the breakout with follow through, but it's bad momentum. There's something wrong with this trend because there's more range bars than trend bars. 24 being climactic. We can count leg 1, pullback leg 2, pullback leg 3. Sideways price action. 25, first pullback. 26 is a high one in a leg 3. High ones in a leg 3 are generally good fades, and you can see the bulls that went short above. The bears that went short above 26 made money. 27, 28. Into the EMA here. Let me turn on there we go. Made money here, 2 legs down. This is where I started to get a little confused, and now I'm thinking about it. Confusion is a hallmark of a trading range. 3-bar rally, 29, 30, 31. Pullback, 32. Another rally, 33. Again, that's a high one. This is nothing but a double top bear flag. Sells off 34. shallow pullback 35, third leg down 36. I'm counting leg 1, pullback leg 2, pullback leg 3. I got filled short here on bar, I want to say 39. I got filled short. Maybe it's 42. I think I got filled short on 39 on the MNQ. It might have been 39. MNQ and E-mini are correlated. I'm just trading the micros because it's easier for me to do math in terms of how many contracts I want to take. I just trade one today. I traded a couple contracts, but I generally just trade one micro versus instead of four micros. One micro on the mini Nasdaq versus 4 micros on the micro mini, whatever the hell that thing is called. So man, something today wore me out. The sharing range was tough for me. We were talking about this a little bit in the stream today. Leg 1, pull back leg 2, or leg 1, pull back leg 2, pull back leg 3. And I was counting this as a 3-legged rally. Leg 1, pull back leg 2, pull back leg 3. Wedge top into resistance. It was good for a scalp, but we're market's going more sideways. So bar 44 is testing the breakout point here. Led to another 2 legs higher, which is leg 1, pull back leg 2, which is its own leg 3. So leg 1, pull back leg 2, pull back leg 3. Leg 1, pull back leg 2, pull back leg 3, 49. Selling off another high one in the trading range. Gets a second leg lower, leg 1, pull back leg 2. 54 becomes a bear trap. I got filled on 55 here, and that was a nice rally. Kind of 3 legs higher and within 3 legs. So leg 1, pull back leg 2, pull back leg 3. Leg 1, pull back. Why does that happen? Leg 1, pull back leg 2, pull back leg 3. Taken out. Bears took out this low, so something's wrong with the bull trend. And then again, leg 1, pull back leg 2, pull leg 1, pull back leg 2, pull back leg 3. Excuse me, I'm about to cough. That made me laugh for some reason. So you guys see I do a lot of leg counting and a lot of market cycle. When I'm counting legs, so the market cycle tells me about the leg count. If I'm in a leg 1, leg 2, which I also was thinking this could be a leg 1, which is why I held it instead of scalping out here. It's also a leg 1. It's a leg 1 because it's breaking out of this range and it has good momentum. But as we started to get to the previous swing high, I had to get out because now we're getting to a leg 3, leg 3. So leg 3, leg 3. In the market cycle, we start out with leg 1, first pullback. So 9 could be the first pullback. Then we go into a channel phase, in which the market channel phase signifies 2-sided trading. And then when we get into third legs, 2-sided trading will turn into a trading range. So the other side, in this case, the bears were stepping up to the plate and they got 2 legs down. So leg 1, pullback, leg 2, pullback, leg 3. Market cycle for the bears, right? Third leg down for the bears. That means that's a fade in a bull trend. That's a wedge bottom bull flag. So the market cycle is always happening on a smaller time frame, on a larger time frame. That's why I think it's really important to understand the market cycle and just how it rotates, because if you understood this was third leg down, you could fade this. And I didn't. I thought we were going to get a reset. I thought this was strong to get its own reset. I thought this was a second leg trap, but instead this was a second leg trap, and I had gotten trapped. I called it out in the thing. I was like, hey, this could be a second leg trap on both ways. I was betting on the bears because I saw this as a lower high. I saw them take out the structure here. Nonetheless, 37 just ended up testing the middle of this bar 7. We rallied for a few hours, about 2 hours, I think. Yeah, 2 hours, 5 minutes ish, however you want to count. We have a big down, we have a big up, big down, big up, and we go sideways. I get filled. I spazzed out on 66. I think I bought the high of 56 here. And I spazzed out at 66. My stop was here. It would have been protected. Could have got break even. But nonetheless, yeah. Someone said that was Trump tweeting. I don't know what it was, but it definitely moved like a news bar. It freaked me out. Showing to get its own second leg down. Leg 1, pull back. Leg 2, pull back. Leg 3, 74 for the bears. Remember what I've been talking about this quite a few times about trend line breaks. There's 3 types of trend line breaks we can get. We can get for the bears. So for this leg, bears can get a leg 1, pull back, leg 2, new low. They eventually get that. Leg 1, pull back, leg 2, recent swing low. Leg 1, pull back, leg 2, higher low, worst case scenario. In this case, they got the worst case scenario. Leg 1, pull back, higher low. Showing 3 legs down, 3 bear bars down, which is also 3 legs, but 3 legs down, showing to get its own second leg. Again, worst case scenario is a higher low. So for the bulls, See how the market's weaving with each other? The bears and bulls weave with each other. Bulls get a leg 1, pull back leg 2. And then in terms of trend line breaks, they got the best case scenario, which is a new high compared to 74, but they weren't able to make a new high compared to 62. 78, good sell signal. End of the day, bears are getting short here, bulls are hitting out, and now bears get a very nice leg 2. Why do I call that a leg 2? I was counting it like this: leg 1, complex pullback, wedge top here, leg 2, selling off, bears closing below the EMA. Challenging day. A couple people had break-even trades. Not bad. I mean, I pretty much had a break-even day. I'm up $20, barely $20. Literally the last 2 bars of the day. Ugh. I hope tomorrow is a little bit easier to trade. This is a really big extended move, so we could just go, oh wow, okay, so you put it to the bottom of the pullback, and that's met by here, not met. So if you measure from here, have this as a swing target, swing high, you can start to scalp all the way through. That's that measured move. Breakout gets 1-to-1. The body gets 1-to-1. Yeah, man. Today's just an idiot. I went for 1-to-1 of this move here. Okay, yeah. So I did get filled on 39 because I had it 1 tick lower. So filled on 39, 43, 44. I try to get out 45, 46, and then it starts to rally. The broker froze up on me. And that's kind of where my tilting moment began. I was able to catch it early. You guys know I'm in the psychology class for Randy Howell, so it's working. My views about psychology are changing. I believe prior to taking this class, it's 3 months long. I love when it's raining. It's raining so hard right now. Prior to this class, I really thought the more you learn, the more the more psychology dissipates. There is some truth to that. However, once you start to trade from a very systematic perspective, that's when I think psychology plays a big role, and I'm feeling it. I felt the bad end of the stick late last year, and now I'm feeling the good end of the stick, however you guys want to put it, because the way Randy Howe teaches psychology is what may cause you to overtrade and size up. It's just happening in this moment, and there's ways to become. So if this was like oversizing, sizing up, overtrading and sizing up, that's bad right now. But then his psychology classes will teach you how that can become your best friend. And I'm not saying oversizing is your best friend, overtrading is your best friend. How you can use those as this is not his analogy, but I'm at a loss for words right now. So let's say like you just start to use them as your event. The same reasons you oversize and revenge trade will be the same reasons you don't. Like now it's becoming like a internal clock. Like, hey, this is about to happen. Walk away. So I was able to do that a little bit today. I still took. I was trading 1 contract. I went to 2 contracts. So and I added to a winner that I didn't want to. I just impulsively did it. So that's when I was like, I gotta go. So yeah, pretty fun. I really like talking to you guys throughout the day. I like live streaming. Probably gonna start talking eventually. I don't want to really talk too much. I don't talk a lot in general. Like this is the most I talk is when I make these videos. So again, let's just finish those measured moves. Here's a measured move. Put it at the bottom of the pullback. That's barely met here, but you're gonna have to hold through some. You might have if you buy the 40 low, you can have like a couple ticks of drawdown. Another measured move here. Now we're getting to the third leg. 1-to-1's met. I went for a measured move of this bar, but then saw the momentum 55, 56, so I held for a little bit more, and that kind of helped me out from the loss perspective. It's 3 bars down, but then you got to ask yourself, is 73, 74 strong to get its own momentum? It is. If you have a limit order set there. Oh, actually, you would get tagged. Oh, no, you would make. So so the bears that short the low of 70 make 1R. You would. I don't. It really. That's really up to the trader. If he does one. If he or she does 1 tick above below the stop loss, he might get stopped out. Nonetheless, tight trading range. So be careful. Almost the time. It's 20 minutes on the. I want to do a fractal. Let's just talk about this real quick, just to keep improving the way we read the markets from a fractal perspective. And we'll talk about this because that was talked about in the Discord. So Roke, if you're watching this, let's just this one's for you. Okay, so let's go in order. And I guess this goes from here to here. So I'm counting 3 legs down for the bears. 1, 2, what the heck? 33 is the spike. I guess it's 4 legs because there's another spike break. I guess it's 5 legs because there's another spike break. The spike break, what I'm looking at, is here. So see this low, it gets taken out rallies. This low gets taken out by this candle. This low gets taken out there. 36 lows gets taken out there. 1 minute. Okay, so move that here, move that there, move this here. You guys kind of see the swings, how I'm talking about the lows are taken out by candles on smaller time frames. This one was off. Okay, so that goes there. Oh wait, no. That goes there. This goes here. I don't know where I had that one. Oh, that's what it's supposed to be like. And then there's still another leg here. So you see what I'm saying? Fractal price action. Like, look, bar 180 rallied, sold off. So there's 2 legs here. This is enough momentum to get its own second leg on the 1 minute. But let's look at it. So on the 5 minute, remember, let's just take a mental screenshot real quick. Man, you know what I just thought? What if I was able to screenshot this, go to the 1 minute? I'm gonna take a chance here. We are gonna try something out here. Okay. Oh, dude, this is tight. Oh, this is sick. Let me resize this. I hope my name's not anywhere on this. Okay. Oh, man, it kind of disappeared, though. All right. So this is the 5 minute. This is the 1 minute. This is so cool. So see the top of this right here is right. As long as I don't click, it'll stay like this. So this top right here is a double top. So we're seeing the high 26, 27, sells off. So within this bar, see the trend line break, there's 3 legs down. Can you guys hear the rain? Let me know if you guys can hear the rain. I love the rain. So here, 27, 28, 29, 3 legs lower. Leg 1, pull back, leg 2. Excuse me, leg 1, pull back, leg 2, pull back, 139, sell off, leg 3. Then we rally. So leg 1, pull back, leg 2, pull back, leg 3. Leg 1, pull back, leg 2, pull back, leg 3. We have a double top here. This bar right here is this selling right here. Sells off. Bulls get a second leg here. So leg 1, trend line break at the top of this bar, and then a leg 2 here. Leg 1, 165 is a pullback. Leg 2, so that's a shallow. That's the second leg trap in a trading range for the bulls. Sells off. Strong breakout bar 35. 35 is this bar right here. Rally inside bar 169. Sells off. Second, so this bar right here is these bars right here. Rally, sells off, and then in here, see from 36 to the high of 37. That's this trend line break right here. Sells off, and then we rally for 3 legs. So now we're looking at these 3 legs, which I was talking about the Roke, how 38 breaks this trend line, leg 1, and then here's that trend line break right here with these 3 bars, and then 39, leg 2, pull back, leg 3, and even within this, we can count multiple legs. So there's multiple legs right here within this pullback. Leg 1, pullback, leg 2, pullback, leg 3, pullback, leg 4, pullback, leg 5. Look at the bears. They get a second leg trap. Leg 1, pullback, leg 2. Testing the breakout point for the bulls. Climactic bar 42. Climactic bar right here. These 4 or 5 bars from here to here is climactic. Testing the midpoint here, which is why I held my short. Strong sell, good for a scalp. Bad momentum 44. So now I'm going to close this and do it again. What is the time? 25 minutes. Okay, we're going to be quick here. Let me know what you guys think of this. I really like doing it from a side-by-side perspective, so we don't have to kind of go off memory. We're just straight up comparing, reading fractal price. Again, I do not read the 1 minute chart during the day. This is something I practice after hours and then use it during real hours, if that makes sense. I don't think it's very good to look at multiple charts during the trading day. It can be very confusing. I'm so curious if my name is anywhere on here because I'm trying to hide my name. So let me make this smaller. 1 minute. That was a little more accurate. I'll fix it in a sec. I gotta fix it now. Here, 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 here. Look at that 3-leg rally to a pullback. Okay. Put that there. That, oh, this is tight. Okay, so now we'll count the legs in this bar. As because remember, dang it. The reason we're counting this leg specifically, because it's 3 legs up. It's a nested 3 legs. So we have leg 1, pull back leg 2, deep pull back leg 3. And then within this we have leg 1, pull back leg 2, pull back leg 3. So that's why we're talking about it. Just so you guys can see how nested things start to work, how the market starts to move. The market respects the market cycle, any time frame, any stock, any Bitcoin thing, any meme coin. Rally, Sean breakout bar 55. Pullback trend line break. So this is a shallow pullback. It's the 275 is the first opposite bar. It's a shallow pullback. 276 buys it. Good for a scalp. Now we're looking here. We get another trend line break. So now we're looking here. Now we're in the 3rd leg, right? Leg 1, pullback leg 2, pullback leg 3, and we go more sideways. Wedge top here gets a bull breakout. Where are we? 57. So we're like looking around here. Gets that bull breakout. So now we're here to this high. Deep pullback. This is a wedge top breakout in the 1 minute. Pulls back. Bears get that second leg trap again. Leg 1, pullback leg 2. Bar 299 is a high 2. High 1 here. High 2 here. Breaking the trend line. This is a good example of a high 2. Breakout bar 301, right? Yep, breakout, and we go more sideways. So an overall 3-legged move, leg 1, pull back, leg 2, pull back, leg 3, pull back, leg 1, pull back, leg 2, pull back, leg 3. Creates a wedge top into resistance, and you guys get the picture. That was faster one. I try and keep these around 20 minutes. I don't want to waste anyone's time. I know you guys are busy. You guys are all grown-ups with your own lives, so let me know what you guys think. If you learned something, share the show. Don't be a hoe. I'll talk to you tomorrow during the live stream. I'm having a good time. See you guys then. And I'll talk to you in the Discord. If you guys want to invite to Discord, links in the comment. I live stream every day. Well, I shouldn't say that. I'm trying to live stream every day. And I will talk to you guys then. Have a good one, everyone. Thank you for your support. I always appreciate it. If you learned something, share the show. Don't be a hoe. Talk to you later. Bye.